I'm Ellis Martin. Join me for a conversation with Craig Shesky, the CFO of the Metals Company, trading on the NASDAQ as TMC. The Metals Company is an explorer of lower-impact battery metals from seafloor polymetallic nodules on a dual mission. One, to supply metals for the clean energy transition with the least possible negative environmental and social impact. And two, to accelerate the transition to a circular metal economy. The Metals Company, through its subsidiaries, holds exploration and commercial rights to 3 polymetallic nodule contract areas in the Clarion-Clipperton zone of the Pacific Ocean, regulated by the International Seabed Authority, sponsored by the governments of Nauru, Kiribati, and the Kingdom of Tonga. Go to the company's website, metals.co. Craig, welcome back to the program. It's great to visit with you today.
Great to see you again too, Ellis.
There's really positive things right now with the Metals Company. Let's review that. We've had some recent interest in investing in your company.
What has been a very good month of June for a share price. But just as a reminder, TMC is developing the world's largest and second largest undeveloped nickel project in the world. In fact, mining.com just last month released their rankings for 2023 in terms of undeveloped nickel projects. And for the second year in a row, we're number 1 and number 2. But it's a resource in the form of polymetallic nodules. These little small potato-sized rocks that sit unattached on top of the seafloor, of which we've identified, per SEC and Canadian reporting standards, 1.6 billion tons of this estimated resource. So it's very big. In order to collect them, there's no digging or blasting or drilling. The processing requires nearly zero solid waste and no tailings. So it's a very large, scalable resource full of nickel, copper, cobalt, and manganese. And we're now getting closer to production. I've had a lot of milestones over the last 6 months, including the successful collection test of over 3,000 tons of these nodules. First company to bring nodules to the surface like this since the 1970s, where there's interest in this area from BP and Shell and Lockheed Martin and Mitsubishi. So really, it's an exciting time to be speaking with you and talking to community about TMC because we are full speed ahead looking for production towards the end of 2024, early 2025.
There's so many different places I can go with this, but let me start with the uneducated point of view from those folks that are really not familiar with mining and not familiar with undersea mining. Now, I know differently, but the first thing that comes to mind would be, are you sending submarines to the bottom of the floor? Are you disturbing the natural habitat? Isn't this sort of a natural oceanic disaster coming in the future if we're not careful?
Well, if being careful and taking a precautionary approach is exactly what's going on. But in order to collect these, you don't need any humans down there. It's effectively collection with a robotic vehicle, picking up these loose rocks off the seafloor, and then they're sent up via a riser pipe, just like you would for offshore oil and gas. But the environment here is very different, and there is life down there worth protecting, of course, but there's just a lot less light to begin with. It's an abyssal zone, which means it's very, very deep and very dark. So you may Google some articles about deep sea mining, and you might see turtles and coral reefs, etc. That's not what this is. This is picking up loose rocks off of the seafloor in what is known to be the most common area of the planet in terms of very, very similar ecosystem over vast thousands of miles. And these nodules are just sitting on top of an area in which there can be no plant life because it's very deep and very dark. And that means there's limited animal life as well. In fact, more than 70% of the life just in this abyssal desert is bacteria. So you can protect it by conserving large blocks of it. And over 43% of this zone of the Pacific has already been set aside for protection. But I would venture that any extractive industry will have some impact. The question is, what is the impact of this relative to the impact of getting the same amount of metal on land, given how critical metals like nickel and copper and cobalt are to the clean energy transition?
And to bolster your point, there was a recent article in Barrons, and the title of the article basically is, a company wants to mine the ocean floor for EV metals, and it's good for the environment. So you're getting some really nice press right now.
Yeah, we are, and we're happy to get new reporters on the story, such as Al Root, who wrote that piece. But yeah, I think you've seen the opposition to this new industry, and there's a loud opposition, has been really writing the same article for years, that we don't know enough, we don't have enough data, we don't need these metals. And these arguments are getting increasingly tired because now we have observed in-field data of actually collecting nodules and seeing what the impact is. Further, we have credible voices like Benchmark Minerals that has come out with a life cycle analysis comparing, all right, what are all the environmental impacts of getting this amount of metal on land? And what's the impact of getting it from nodules from TMC's Norway Deep project? And what Benchmark found was that across every impact category measured for nickel and every known path of getting nickel on land, whether that's sulfides in Australia or nickel laterites in the Indonesian rainforest, for every impact category measured, nodules presented the lowest impact, including 90% lower CO2 emissions per ton of nickel produced. So you need a lot of metal for the clean transition. And the International Energy Agency says you need 4 to 5 times more of these critical base metals if you're going to hit any of our climate goals. So in order to provide these metals needed for the clean transition, you got to get them from somewhere. And relative to the land-based sources, this is a lower impact source, but it's also scalable. There are good other projects on land, and of course, new projects on land will be needed as well. But this is a resource that is so big. You have enough nickel, copper, cobalt, and manganese just in TMC's contract areas alone to electrify the entire US vehicle fleet. And it's lower impact relative to the land-based sources. Frankly, it can be scaled up on the time scale in which we need it.
Is it more economic to do it that way?
It actually is. We would anticipate being the second lowest cost nickel producer in the world behind Norilsk in Russia. But it's not anything special that TMC is doing. It's just because this resource naturally has very high grade. So the difficulty, especially for nickel and copper, we've been mining these for thousands of years, and the land-based grades, the head grades are going down. And that means the economics of collection are more challenged, but it also means that the environmental impacts are worse because you're moving more molecules to get a less amount of metal. So when you have exploding demand, new mines coming on land, which are lower grade, that's an exponential increase in tailings and an exponential increase in solid waste. And we think we can be a major antidote to that. But the economic cost is also driven by the fact that this is very high grade. It's on a nickel equivalent basis, a 3.2% resource. That's compared to 1.8% for Norilsk in Russia, and on average, 0.2 to 0.3% of the other undeveloped nickel projects in North America. So we're 10 times higher grade or more versus those alternatives, and that's why we anticipate lower operating costs. It also drives our CapEx being lower. We are taking a capital-light approach to getting into production. Think about what you have to do to open a mine on land. Even after you do 10 years of exploration, then you have to build a port, power plant, railroads. You have to move local communities. You have to have fresh water. All of these things cost billions in infrastructure that has to get built out. What we have to do to collect these nodules is effectively float a ship out there and have our robotic collector going along the seafloor. And that ship and that system, which we've already proven work, into the Samsung 10,000 drill ship. So you're taking existing offshore oil and gas assets and repurposing them. You don't have to build new ships from scratch. And when it comes to processing the nodules on land, you can take it to existing smelting facilities. We're going to start out with an existing smelter in Japan per an MOU signed in March of this year. So instead of doing all of this from scratch, like you would have to do with a land-based deposit, which typically is in a desert or a jungle and requires a lot of new infrastructure to be built, we can actually take these nodules off the seafloor with existing assets and take them to places onshore where the assets already exist as well, bringing our CapEx down to a bare minimum.
And you can nearly be carbon neutral from the start. And even though I drive an EV, and many people do here in California, it really hasn't been good for the environment, so to speak, because of all that you have to do to process that ore to put into those cars.
We would agree. It's really dependent on where that power source is coming from when it gets to the vehicle charger. And for a lot of places, it's still coal-fired. When you see some confused policy in Northern Europe, where you have certain types of power like nuclear being shut down, while late-night coal-fired power plants are being lit up again. So it's a very difficult equation to solve. The thing that's going to make EVs even more low carbon is what are the emissions that go into the production of the battery.
That's what I was talking about.
No, you're absolutely right. And I think that in order to drive down that carbon footprint, you're going to need new sources like these nodules that are able to be scaled up in time. And in fact, we're talking about the European Union calling for battery passports, where you're going to see exactly a traceability standard. So you'll know exactly where the metal came from in your battery. And it's going to be reported on the side of a vehicle, just like miles per gallon. Well, what's it going to look like when Ford or other companies, Volkswagen, who might be getting nickel from Indonesia, cutting down those rainforests? That's going to be a pretty huge environmental footprint on top of coal or other types of fossil fuel power needed to smelt those metals. So that's a lot that's going to be coming and a lot that's going to be clear to the consumer in the coming years. And we think nodules are going to be a much better alternative to that.
You forwarded me an article written by Joe Carr about, again, the viability of undersea mining. And many companies have failed before you came along. And that was noted in the article specifically.
Yeah, look, there have been some that have failed going back to, there's Nautilus in the early 2000s, ran into the great financial crisis. And others are going after very different types of resources. Just like on land, there are a wide array of types of projects. There is seafloor massive sulfides, which often are copper or gold deposits, and Norway recently announced that they are getting into seafloor massive sulfides, and their prime minister thinks that deep sea mining can be done sustainably. There are seamount crusts, which occur in shallower waters with more biodiverse ecosystems around that. And those are some of those failed ventures in terms of deep sea mining. That is actually hard rock mining, where it's breaking up the ore from the substrate, using explosives underwater. It's more akin to mining on land. What we're doing is a different type of deep sea mining that frankly has never been done commercially before. And this is picking up loose rocks off of the seafloor. And when I mentioned mention BP, Shell, Lockheed, Sumitomo, all of these companies that were collecting nodules back in the 1970s. This was on a test basis, and then the United Nations stepped in, and the UN said, we haven't agreed yet who owns the oceans. You don't have clean title to this asset. So they all picked up and went home and did something else. Now we have that final piece of the regulatory puzzle. So this isn't a matter of past ventures failed because technology wasn't there. The reason this hasn't gone forward is that there was no regulatory environment. And now we have that final piece falling in place in 2023. And that's why the time is now for deep sea nodules.
Are you going to be able to dominate the space over time? Is your method of operation proprietary? I would think that this would encourage competition potentially.
Yeah, it would. And in fact, there have been new investments from competitors, which we welcome. This isn't something where TMC wants to be on an island, the only one doing it. But I think our leadership in this industry has led to new investment. You've seen Transocean invest in the Belgian contractor who has a Clarion-Clipperton Zone contract for exploration. And they also devoted a Samsung 10,000 drill ship to nodule exploration. So the fact that you have credible voices making investments in this space. I mentioned Norway. There's also Japan. Japan, who is looking for rare earths within 2024 near their territorial waters. Importantly, though, China has also been ramping up investment. China has been smelting nodules from the territorial waters in Changsha for a few decades. They have the technology to do it. However, the starting gun for this industry is not going to lead to a gold rush mentality. And the reason for that is that these regulations are already being put in place before production begins. So you have to, when you have an exploration contract, do at least 3 years of environmental baseline. TMC has done that. Nobody else has. In fact, we just submitted data to the International Seabed Authority from some of our environmental campaigns, and we've submitted more data than all other contractors combined. So we have a head start in terms of the environmental work. We have a head start in terms of resource definition. We have SEC and Canadian compliant resource statements. Nobody else has that. So importantly, not only are we ahead in the work that we've done, but there is a recognition that most of the contract areas within this Clarion-Clipperton Zone have already been allocated. So we have 3 plots in a very good neighborhood. And as more and more people invest in this space, well, that increases the value of our real estate as well, to use that analogy. So we do have a head start. I don't think that we'll dominate, but I do think that we'll have a lead that is going to allow us to continue to ramp up production. But I think China will be there as well. And it'll be important for the West to recognize that if you want access to this resource, there aren't a lot of unallocated plots available. And the way to get access is to partner with companies like TMC.
I'm going to finish with this question right here. I've just come back from Australia, where I have been observing the rare earth industry, the EV industry, all of that. And what I've learned, that vertical integration and lateral integration is really where the market is headed. And there's a lot of M&A activity going on. Could you be potentially acquired down the road in a few years, maybe by one of the majors? I'm just throwing names out there like Mitsubishi, or pick any of the end users over there.
It's a good question. And when you talk about who wants growth in battery metals, it's not just mining companies. It's offshore oil and gas companies. Our CEO is at the Offshore Technology Conference in Houston in May, and there's a big push towards getting into seafloor exploration from these offshore oil and gas companies who have the assets, they have the experience. And now, if they expect that perhaps we're going to get to waning oil exploration in decades ahead, this is a way to repurpose those assets. So there's a lot of interest there. But you're absolutely right. There's a lot of interest from automakers, battery makers, precursor makers, people who really need these metals desperately. So while there is interest, the good news for TMC and our shareholders is that over 50% of our shareholder base is in the hands of insiders of those close to the company, including Allseas, which is our partner offshore. Our largest shareholder, Andre Karkar, through Eris Capital. He's also a board member. He owns about 20%. And in fact, Andre purchased 4 million shares earlier this month. And that is one thing that sparked the rally, that large insider buy. And our chairman and CEO, Jared Barron, has high single-digit % as well, along with other management insiders and directors. So frankly, we are always going to do what's in the best interest of our shareholders, but we are not interested in selling anywhere close to our current share price.
Well, that's good to hear. What can we see during the next few months?
I think what you're going to see over the next few months is more validation in terms of our environmental program. You're going to see more studies from independent research firms such as Benchmark Minerals on why nodules are a better source, but not just a better source. We're going to need a lot of these new sources to meet our clean energy needs. Importantly, I do think you're going to see progress from the regulator. The International Seabed Authority is meeting again in July, and at their last March meeting, all member countries affirm that it is their duty as members of the International Seabed Authority to deliver the exploitation regime, final mining, and all of them are working towards that. And we think we're going to see further progress. And then toward the end of this year, all of the pieces are falling into place for our environmental work, our pre-feasibility work alongside Bechtel, who joined our project, and then also finally making our application to the regulator, which would allow us to begin work towards the end of 2024, early 2025. So it's further milestones like that I think are going to lead to a major re-rating in our share price, because right now, even despite the recent rally, we're trading at a few percent of the underlying net present value of the asset. Pennies on the dollar. And the average nickel developer on land at this stage of production, pre-production, might trade 30, 40, 50% of NPV. So there's still a major underlying discount for what is the world's largest nickel project. And we just got to keep it on track, preserve our cash, and do what's in the best interest of shareholders.
So the opportunity now, folks, listeners, is potentially right now. The best opportunity, I should say. But I'll leave that up to you. It's not our decision to make. Craig, I expect to chat with you in just a few short weeks then. Thank you so much for joining me today on the program.
Thanks as always, Ellis. It was my pleasure.
I've been speaking with Craig Shesky, the CFO of the Metals Company, trading on the NASDAQ as TMC. Go to the company's website, metals.co. I'm Ellis Martin.
Would you like to be one of the first to see who we are following? Subscribe to our audio newsletter. It's free. EllisMartinReport.com.